Hello, welcome, part 4, Japanese candlesticks. So far in this free technical analysis course I've covered the basics of price action, what price action is, why we should use price action, and also market direction, trends and ranges, uptrends, downtrends, and when price moves sideways, when it's indecisive. Things are really going to step up now. This video onward is going to take a higher percentage of your brain to understand. I'm here to help you. If something doesn't make sense, if you just can't grasp a certain concept, principle, if there's a slide that makes no sense to you, leave your question in the comment section below or drop me an email. I'm happy to help you. There's no cost for this support at all. Feel free to reach out. It will take time to learn this. A lot of this is completely foreign to a lot of people. If you're new to trading, a lot of these technical things I'm going to go through are completely new. So it's understandable that it's not going to click into place straight away. But just bear with it, it will. Okay. So far, when we've been looking at charts, they've looked like this top chart here. We've had the date and time down the bottom, the price on the y-axis here, and we've had like this line chart plotted on the date and time with the price information. We're now going to step up and use candlestick charts, and this is what a candlestick chart looks like. This is actually the same price data. If you look at the moves here on this line chart, it's the same as on here. It's the same time frame, it's the same currency pair. This is just a candlestick chart. It just displays the price data a bit differently to the line chart. Not many currency traders or traders as a whole, but specifically in Forex trading, not many traders use line charts. They use these candlestick charts, Japanese candlestick charts. And in this video I'm going to teach you how to understand these candlesticks. It's not as hard as it may look. Why? Why bother using a chart that looks like this, that's a lot more sophisticated, a lot more complicated, rather than a line chart? Well, it's all to do with making money. In order to make money, you need to be able to predict where future price is going to be with some degree of accuracy. And using these Japanese candlesticks, these candlestick charts, can help you to predict that future price direction with greater accuracy, with a greater chance of success. I use candlesticks on a daily basis. I rarely look at a line chart. It's all candlestick charts. So the basics of candlesticks that I'm going to go through in this course are how to read them, so how to understand them, what they're telling you, how they impact time frames, and also candlestick setups. This video will cover these first two, how to read these candles and how they impact time frames. Candlestick setups will be covered in later videos, probably the next video onward. There may be 2 or 3 videos about candlestick setups. As mentioned previously, if you have questions about any of these things, just leave it in the comment section below. Every candle has 4 bits of crucial information. It's formed through these 4 things: an open price, a closing price, a high, and low. Sometimes these are abbreviated to just the first letter. So you might see a candle has a HLOC, high, low, opening, close. And we'll look at these 4 things in this video and how that helps to form the Japanese candlestick. So this is what the candlesticks look like closer up. So going back to my chart, I'm going back and forth a lot in this video. I do apologize, but looking at this chart, at these candlesticks, there's lots of candlesticks on this chart. If we zoom in, this is kind of what they look like. These big rectangular shapes are the candle bodies, and the lines above and below the rectangular shape are the candle wicks. And these are all formed through the open, close, high, and low. So the open and close forms the candle body. This will make more sense in a moment because I'm going to go through lots of examples with you. The high and low form the wicks. So we have open close form the body. The high and low form the wicks. The body and the wicks are the complete Japanese candlestick. So we have the body. This is a big green body, big rectangular shape, and then these lines above and below that rectangle are the wicks. That's the whole Japanese candlestick. Open and close, body, high, low, wicks. So let's have a look at the body first of all. We'll take this one step at a time. So let's look at this open and close and how that forms the candlestick body. So we have a candlestick body here. The open price is at the bottom of the candle in this example, and the open price was 106.78. It doesn't matter which currency pair, it doesn't matter which time frame. Let's ignore those things for now. We have an opening price and we have a closing price. Because the closing price is higher, it's at the top. So if the closing price is higher than the open, you're going to have open at the bottom, close at the top. If you have a closing price that's lower than the open, then the closing price is going to be at the bottom of the candle and the open price will be at the top. Now, to make this easier, my Japanese candlesticks are not normally green and red. So if the closing price is higher than the open, it's green. If the closing price is lower than the open, it's red. Okay, so let's take this one step at a time. Price opened at 106.78. It closed at 106.91. The open price is here at the bottom of the candle. The closing price is here at the top of the candle. So 106.78 was the open price. 106.91 is the closing price. And for me, that forms a green candle with the candle open here, the candle close at the top. Looking at this example, where the closing price is lower, 102.50, than the opening price, which was 103.17, the opening price is at the top and the closing price is at the bottom. And for me, this is a red candle. Going back to our trends, where we have a bullish trend and a bearish trend, this can be referred to as a bullish candle. It's an upward candle. Price moved up. It opened down here and closed up here. It's a bullish candle. Prices are moving up. This can be referred to as a bearish candle. Price opened up here and closed down here. The closing price was lower than the opening price. Price is coming down. It's a bearish candle. So looking at this chart again, this is the same chart as before but amplified, magnified. We have lots of Japanese candlesticks. Let's just have a look at some of them. So this is a big green one here. So price opened here at the bottom, closed at the top with a nice big green candle. The next candle's the same. So opened here, closed here. Don't worry about the wicks, just these rectangle bodies. If we look at them, this one opened here, closed up here. It's a big green candle. It's a bullish candle. Let's look at some red ones. So this red candle, it opened here and closed down here. This one opened here and closed down here. So the closing price is lower than the opening price. It forms a bearish candle, a red candle. These don't have to be green and red. Most of the time they are, but some people use yellow and purple or black and white or whatever colours they want. So the other green candle here, opened here, closed here. Opened here, closed here. Big red candle over here, opened here, closed here. So the bearish candles have the opening price at the top, the closing price at the bottom. The bullish candles have the opening price at the bottom, the closing price at the top. That's the basics of Japanese candlestick bodies. It's the opening and closing price. The open, the close, forms the candle body. So let's now have a look at these wicks. So these lines that appear above the body. So once again we have this body here, which will have an opening price and a closing price, but that's not marked on this slide, just to keep things simple. The upper wick shows the high of price. The lower wick shows the low of price. So we have an open and close for the body, a high and a low for the wicks. So let's have a look at this one. So this one opened here and closed here. So opened at 101.66. It closed at a lower price, 101.57. We have a bearish candle. The opening is at the top. The closing is at the bottom. And we have these wicks with the high at 101.73 and the low at 101.51. Now I'm not sure if you can see this, but the top right says 15-minute chart. And this is where time frames are going to come into play. And we'll come back to that in a moment. So here's another example for you. With the opening price at 96.25. The closing price is higher. So it's a bullish candle. The open price at the bottom, closing price is at the top. 97.42. We have a high up here and a low down here. Let's go back to this chart here. So you can now see we have candle bodies and candle wicks. You know, this candle here had an open here and a close here, a high and a low. Open, close, high, low. Bullish candles, bearish candles. Now, when do these candles open and when do they close? That's determined by the time frame. So this is actually a 15-minute chart of Euro US dollar. 15-minute chart of Euro US dollar. That means every 15 minutes a candle will close and a new one will open. So if we went to a 15-minute chart, each of these candlesticks, Japanese candlesticks, represents 15 minutes of price action. So every 15 minutes a new candle appears. These candles individually show 15 minutes of price movement. The open price at the beginning of the 15 minutes, the closing price at the end of the 15 minutes, the high of price within that 15 minutes, the low of price within that 15 minutes. So going back to this example, the 15-minute chart example, we have an opening price of 101.66. Let's say at 3 o'clock in the afternoon, price is at 101.66. That's the open of the candle. 15 minutes later, this candle will close and it closes at 101.57. That forms the candle body and a new candle begins. Within that 15 minutes though, between 3 o'clock and 3:15, price was up here and created a high at 101.73 and it created a low of 101.51. In a way, these wicks show where price was within that 15 minutes. But the open and the close show us where price actually was at the beginning of the 15 minutes and where it actually was at the end of the 15 minutes. Another way to think of these candlesticks is like a tug of war. So if we opened at 101.66, at some point the bulls, the buyers, pull price up here, and then the bears, the sellers, pull price down here, but we eventually closed around here. I know this is a lot to take in. You can rewatch the video, but if you stick with this course, this will make more sense as it goes on. This is a daily chart. So what does that mean? That means each candle represents a whole day of price action, price behavior, price movement. We open at 96.25. We close at 97.42. That forms the candle body. It would have opened at the beginning of the day, closed at the end of the day. But at some point during the day, price was actually all the way down here, 95.01. and it was actually a bit higher at 97.65, but it closed at 97.42. So these wicks show where price was within the duration of the candle, but the opening closing price is where price actually was when the candle opened and closed. As mentioned twice already, leave me some questions below if this doesn't make sense. Rewatch the video. The more you watch it, the more it will make sense. You can obviously look at charts yourself. You can bring these charts up. I have provided links in a previous video. There are links on my website where you can download these platforms for free and look at these candlesticks, and you can see them live. You can see them forming in real time. That may help you to understand these things better. These are Japanese candlesticks. They show the opening closing price of within a certain time frame, within 15 minutes of a currency pair or any financial instrument. You can use these for stocks or commodities. They also show the high and low within that time frame. Thank you for watching, and I'll speak to you in the next video.